Hello, friends. It's always a pleasure to connect with all of you on Lucky Talks. And as we move along into the festive season, and I think there will be an extended festive season till December, the market is throwing up interesting avenues and opportunities for all of us. Today, we are going to be predominantly discussing a product, a new fund offer called ICICI Prudential S&P BSE 500 ETF FOF. Before I move into the product itself,
Hello, friends.
let me
It's
just
always a
recount
pleasure
what's
to connect
happened
with all of you
with
on
us in the last
Lucky
18
Talks.
months or so.
And as we
More
move along
importantly,
into the
what should
festive
investors
season,
be
and
doing
I
right
think there
now
will
at
be an
this juncture,
extended.
given that there is a lot of news flow across the globe as well as in India on what's happening and what one should do. So if we look at the last 18 months, courtesy the central banks printing a lot of money or in reducing interest rates, making availability of money very easy, we've seen all asset classes, be it equities, be it commodities, be it real estate, do very well. In fact, as interest rates fell, the bonds also did exceedingly well. So across asset classes, if you are invested, you have made money. The fact remains that over the next 2 to 3 years, because of the last 18 months of rally, the market is probably likely to see probably a narrower rally. Market is probably be more difficult in terms of making returns. And hence, as an investor, it becomes important for you to relook at your overall asset allocation and probably make the changes that are required in terms of your overall asset allocation plan. India by itself over the next 10 years is likely to grow from $3 trillion to $6 trillion or maybe even more. And by virtue of that, the listed equity space should see a lot of opportunities come your way. And much like what happened probably in the 1970 to 1990 in Japan, whereas Japanese economy grew, the Japanese equity markets did very well because Japan was growing at one of the fastest pace, given their demographics was in favor and their technology-related growth in terms of auto sales or export sales to US was growing. After the 1990s, it was probably Hong Kong, Singapore, and then last 10, 15 years, China has been the fastest growing economy in the globe. Now with China slowing down because of their demography becoming adverse, in other words, their working population reducing, their dependent population increasing, it's probably India's turn for the next 10 to 15 years to take the advantage of the growth that is there in the world. And India can be the factory to the world, India can be the exporter to the world. And that is being reflected in very strong export numbers across many sectors. So traditionally, we've been strong in exports in software, strong in exports in pharmaceuticals. But it is heartening to see in the last 5 to 6 years, we've seen strong exports across capital goods, across other items, including autos and auto ancillary. So as you can see, the beauty of India is that we have a very wide set of sectors, very wide range of companies. And with the new age technology companies also coming in, that spectrum is only increasing. As an investor, if you want to participate across the wide spectrum, because in the next 10 years, the India that we know is going to change, and a large part of the growth will come in companies which are beyond the top 100 companies. So if you want to participate there, top 50 companies, as well as, let's say, the top 500 companies, the best way we think can be an index which gives you in one go the benefit of the 500 companies that are there listed. And these 500 companies would probably form about 90-95% of the market capitalization that is there in India. So as in a single investment, if you get an advantage of 500 stocks, you get diversification, you get sectoral diversification as well. The individual stock components in terms of their weightages are also in check. And if you look at the overall balance, because you are participating in many of the stocks early. So if you have a 500 stock universe, tomorrow's large cap company, which will be today either a mid cap or small cap, would already be part of your portfolio, courtesy the you owning the 500 names. Is it easy to own 500 names in a single fund? The answer is yes. And that's why the ICICI Prudential S&P BSE 500 ETF has been in place. And we are very happy to launch the fund of fund, which is going to be investing in the BSE 500 ETF of ICICI Prudential. So what you will get as an investor is the ability to participate in the 500 names of the market in a single investment. And you can do an SIP, you can basically start investing slowly and build over a long period of time as a structural investment. Many renowned investors globally have said that a 500 stock universe of a single fund can basically be a very good way to participate in any country's growth. And it is also a good way to retire, to put your retirement money. So with that thought process also in mind, the ICICI Prudential S&P BSE 500 ETF FOF, which is the fund of fund which invests in the ETF of BSE 500, is something which should be part of your core portfolio for the long run. And like I said, you're investing at a very early stage in some of the mid caps and large caps of the future. So there are many companies in the 250th rank or to 300th rank or 350th rank, which eventually, because of business growth, can become the tomorrow's large cap or tomorrow's blue chip companies. So by virtue of investing today in the BSE 500, you get the advantage of, at a low cost, participating in the entire 500 stock universe. With that thought process, we're very happy to bring to you the fund of fund. And we truly believe that at this juncture, when you're looking at your overall asset allocation, wherein the mid cap, small cap space has given a very sharp uptick in the last 1.5 year, you may want to look at if there is a scope to rebalance your overall portfolio. And in that rebalancing, I think a good mix of equity, within equity, if you look at it, the broad universes like BSE 500 can be a good fit from a addition perspective, and also the gold as an asset class is something which can be looked at. So from an investor standpoint, today we believe that incremental allocation, if it allows, your asset allocation allows in equity, BSE 500 is a good way to start doing it, be it an SIP mode or a lump sum mode. And as we move along, you can basically see, along with the BSE 500, even gold as an asset class can be added through the ETF route. So as an investor, we believe that markets will provide opportunities. Inflation is a concern which is real, and many people say that because of higher energy prices, inflation will probably be there, and it's something which will stay there for the next 6 to 12 months. But more importantly, as we see along that over the next few months or few quarters, the global interest rates will also go up. And as global interest rates go up, you will find that equity markets will probably start reflecting a bit more volatility than they have in the last 18 months. So while it obviously looked very easy in the last 18 months, and many of our investors, courtesy, if you see the number of demat accounts has gone up from 2 crores odd about a year and a half back to 7 crores today. And that is good from an India financialization perspective. But a lot of us have started, thinking that the markets are a very easy place to make money, and that may not be the case when volatility sets in. So relook at your overall allocation, and we believe that funds like ICICI Prudential, S&P BSE 500 ETF FOF, which is a very good way to participate across the 500 names with a single fund, will fit in your overall allocation. It's a low-cost way to do it. It's a very convenient way to do it. And I think as an overall investment, if you keep it for the long term, you are participating in India's journey, which can be a golden decade as far as India is concerned over the next 10 years. Will there be volatility? Will there be ups and downs? The answer is yes. But if you stay invested over the next 10 years and keep your asset allocation in place, there is clearly a wealth effect which will probably kick in. And it is probably going to be useful for you to participate in the growth of India through the BSE 500 ETF as well as the FOF. I think over the last 18 months or so, we've seen overall investor sentiment being very positive. With the kind of listings that we are seeing in IPO, the IPO market is also pretty strong. But one should be very cognizant of the fact that equities have scope or may get volatile when interest rates start fluctuation globally. Already we are seeing in the last 1 month or so, there is some element of, let's say, correction in the wider markets, and that probably is something which you should keep in mind. So from an overall investor standpoint, we believe that instead of probably having a very large part of your portfolio in direct investments in equity, it may make sense to consolidate your position by having the ICICI Prudential S&P BSE 500 ETF FOF, which is anyways is giving you a flavor of the entire Indian market, literally with more than 90% allocation of the, or 90% of the market cap in India being represented within the 500 names. And since it is a market cap based index, the larger companies have larger weight. So I think from an investor standpoint, we truly believe that this is a fund which should be there as part of your really long-term allocation in equities, and it should do well over the long period of time, because most of the funds will find it difficult to basically uh, try and beat the BSE 500 returns over the next 8, 10, 15 years. So a patient investor can actually generate wealth through the BSE 500 ETF. There are other ETFs, of course, and the concept of fund, if I may say, uh, people may ask, why do we need a fund of fund? You already have an ETF. But then there are very limited number of Indians, which is growing, of course, who have a demat account and a trading account and go on the exchange and buy. A very large part of India still wants to probably invest in the traditional way in the mutual fund, which is, through their account and that through their folios. And that's where the fund of fund will make it easier for those investors who do not have a demat account or trading account, or who want to do SIPs, etc. It is much easier to do it through the fund of fund. So that's where the fund of fund is something which is useful. We've seen the ICICI Prudential low vol 30 fund of fund also garner a lot of interest among investors, because it just makes it convenient for people to start participating in the low vol fund of fund, which basically is a combination of 30 stocks which have the lowest volatility and are steady. So our endeavor is to provide the investors with a bouquet of products which will fit in their overall asset allocation, and across sectors, themes, smart beta indices, we've been providing that. So as part of that endeavor, we are adding to the fund of fund bouquet by launching the ICICI Prudential S&P BSE 500 ETF FOF, which is to participate in India's growth story. So with that, probably I will stop and I will take up a few questions if you have any. Please feel free to post the questions and we'll be happy to answer them. So the first question, as I see it, is that there are the markets are getting choppier. How much should be the ideal equity allocation that I should have? The question is, how much should be the ideal equity allocation that I should have, and what way in which one should participate, given that there's a lot of talk about active, passive, and how should one go about with it? I would like to say, of course, that we pay less attention to our financial investments, and it's probably that's where a financial advisor or someone who can understand it better will be of great use. But as a general parlance, a good healthy mix of active funds and passive funds is what we are seeing most investors move towards. Within the passive category, ETFs are a growing trend, index funds are a growing trend. And like I said, that if you have the BSE 500 ETF FOF, which we are launching, it will basically be a good fit for the long term in terms of your requirement to participate in the Indian equity markets. Because in one go, in a single fund, the ICICI Prudential S&P BSE 500 ETF FOF, which is the fund of fund investing in the ETF, and the ETF in turn invest in the top 500 names. You're getting the entire 500 stock universe. Think about it, many of the blue chip names of today, let's say the technology names, which we are very well aware of, maybe 20 years back, 25 years back, they were much smaller companies. Through 25 years, they've reached a stage where they've basically become blue chip companies and are part of the, let's say, the 50 stock benchmark or the 30 stock benchmark that is there. If you want to participate in many of these smaller names early and allow them to grow your portfolio, then the BSE 500 FOF, which we are launching, is a very good way to start participating in it early. The next question is on gold. Whether gold is a good investment, because in the last 1 year, returns have not been made in that. I understand the let's say the fact that because past returns in gold haven't been good, many of the investors feel that as a concept or gold as an investment is something which doesn't make sense. But let's look at the global debt has increased to more than $200 trillion. Global equity markets, in terms of their market cap, have grown above $100 trillion. Then you have the entire concept of gold itself, and gold is not available in abundance. You cannot print gold, and mining of gold is not easy. You cannot keep mining unlimited amounts of gold. It's a very tough task to mine gold. Incrementally, I think 2 to 3% additional supply of gold is possible to mine. So gold is in limited quantity, and the total overall stock of gold that is there in the world so far, which is mined and estimated to be around 11 to 12 trillion dollars. So you have global debt, which is $200 trillion, global equity, which is more than $100 trillion, while global gold is probably only about 10 to $12 trillion. This ratio of market cap to gold is probably at a multi-decade low. And that itself should tell us that when there is probably some volatility in the markets, gold can be a good asset class to hedge against inflation, to hedge against volatility. And hence our belief that maybe 5 to 10% of incremental portfolio, even if you have, for example, an over-investment in equity and you want to book profits in equity, it's a good probably time to book out profits in equity to move towards gold if you are over-invested in equity. So it all depends on your overall allocation. Incremental allocations in gold, something which makes sense given the valuations at which equity is, and gold has been an underperformer. So if you have 0% in gold, you should add gold. If you have 0% in equity, obviously it doesn't make sense to be 0% in equity in a growing country like India, and you should start building it. So ultimately, the decision to invest in gold is also a part of decision of asset allocation. But clearly, where we are in terms of last 1 year return of gold being negative or more or less flat, it makes a good investment thesis because we are seeing inflation going up, we are seeing liquidity in abundance. And in general, if there is volatility in financial markets which may come up, gold becomes a good asset class to participate or hedge your overall portfolio balance against. The next question is on what should one do if one is, looking at creating a portfolio, an overall portfolio bucket. Is there a specific prescription as to how much should be active, passive, or within active? Which are the categories that should be chosen? I would say that ultimately depends on your own risk profile. If you look at your overall requirements over the next 5 to 10 years, your overall, let's say, income and the expenses which are there, and obviously the expenses on goods and services are only going to increase. If you see that overall, it is very clear that you will need a sizable portion of your money in equities, because in inflationary times, which we are expecting in the next few years, equities as an asset class beats inflation. But in the last maybe 2 years, the rally in equities has been strong. So you'll have to balance it in a way where you have basically a stable allocation to equity and not having a over-invested status in equity. So how much equity you should have, it totally depends on your own risk profile, your own, let's say, risks and responsibilities and earning power. But what I would like to say is that there cannot be a situation where you are sitting on a low equity position, or you should be prepared at least that whenever there is a correction in the markets, you increase your equity exposure. And if you don't want to worry about all of these things and you have a long-term horizon, simply invest in the ICICI Prudential BSE 500, S&P BSE 500 ETF, FOF, and probably as and when there are corrections, you can keep adding. Because ultimately a 500 stock universe over the next 10 years, 15 years, 20 years, if invested systematically and smartly, will allow you to participate in India's growth. And none of us will disagree that with the kind of demography that we have, with the kind of young population that we have, and with the kind of opportunities global markets are providing to the Indians, India as a market will see across sectors tremendous growth. And if you want to capture that, the best way we feel can be investing part of your assets into the ICICI Prudential S&P BSE 500 ETF FOF, which we are launching for you. With that, we'll probably end the call. Thank you for your time and patience always. Take care and good day.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully